Yes.
Oh,
Well, welcome and thank you for joining us. It's Ron Hauth with Robert Ede on Real Estate Chat, and we're talking about the month that we're in the middle of. You might have just seen the February results come around from the Canadian Real Estate Association. Well, they have to, compile it from all over the place and seasonally adjust it and fiddle with it and tell you that it was lousy. So we're going to make a projection based on the first half of March and the fact that we're in the middle of spring break for public school, and make an assertion about what's happening right now, which we may be able to take action on in the next couple of weeks. So um, we have Ron, the Mon Hoth,
thank you.
sitting in a springy garden, which, if this is the first day of spring, is tomorrow. This is some festival they were celebrating at the office this morning, Nowruz, for those of you who don't know Iranian.
Happy Nowruz. Ede Mubarak.
My goodness, you know everything, Ronnie.
Yeah, well, that's just a few things in Farsi. Just the good words. I learned the good words. A couple bad ones,
Well,
but
that's what, so if you're having an open house, you can greet the people and wherever they're from, figure that out, and then you can hit them with, I know everything. Yeah,
right.
I have a story about my Hungarian future mother-in-law, who I surprised with my knowledge of the swear words
Oh,
inadvertently. But I don't think that was what I was supposed to do. Okay, so um, you had a little chat this morning about the stats in the meeting this morning, Ronnie. What do you sort of think's going on? And I'll pull up this background chart while you tell me what you're thinking.
well, the charts that I'm dealing with, that I make, I don't. They only record or present the figures at the end of the month, but don't recognize that a month may start slow and increase as it goes along. So I noticed in February that it did start slow, much like the January um, sales, but picked up noticeably in by the end of February. And I think March seems to be doing the same thing. Um, where it goes and how fast it goes remains to be seen yet, but I'm cautiously optimistic that things are going to improve, but hopefully stay stable. I know our inventory is still high, but dropping a bit, and people are more optimistically looking at getting out now that the weather's improved, especially improving. Getting out and starting to look and make some decisions. And there are still opportunities out there. They may shrink in volume. There won't be as many, but they're still out there. And I think we're going to have a pretty good March, although as you were mentioning, it's projected not to be one of the better ones.
Well, we can't go from lousy, lousy, which was December, January, February, to marvelous all at once.
No, that's for
And
sure.
we had a false spring in 23 and 24, and a bad attempt at it last year, 25. And so for there to be a rally in the spring is normal. For there to be a big change in the number of sales relative to the averages, which is how we've been looking at it, I think, as you say, is not going to happen. It's not going to be fantastic, but it'll be better than the worst that it was. And I'm
You'll
going to
be
say,
cautious.
well, everybody is cautious, and
Yeah.
as we've been saying all the way along, that one of these days it's going to turn around. Now, is that going to turn around in 2 days, in 2 months, in 2 years? That's what we don't know. And is the turnaround going to be a whoosh, or is it going to be gradual? It can be only gradual because, like turning an ocean liner, how do you do it? You do it very slowly. And the big bugaboo is the number of listings. I'm calling it a listing inventory overload. And I'll show a chart later that says that it's like 50 to 70% overloaded. And that's comprised of non owner investors, either assignments or too high failed flips or just their last gasp attempt before it goes power of sale and then the ultimate power of sale. That we hear all the time on the news about new condos downtown, all over the place, that nobody wants them. They're standing there empty. There's 30% empty. It's much different than the resale condo market and much different than the freehold market. Downtown 416 south of 401 is much different than North York, still good, than Scarborough, than the West End, Wasteland, and then you got Etobicoke, which is good. Of course, my phone goes off now.
That's not me.
Okay. And I'm just going to mention quickly on March the 10th and on the newspapers on the 18th. I'm doing a recording, I'll call you later. The Government Ontario has partnered with a private capital and management group to buy 2,200 vacant condos. Now, they're either bailing out their friends or providing 2,200 rental properties that are sorely needed. And they say that 550 of this 2,200 will be set aside for geared to income tenants who are 25 to 30% below market and income qualifying. So this is your tax money bailing out their friends. Oh, I mean, helping bring new inventory, which is already built, to the market as rentals. And they'll have a contract that will say you can't sell these for a certain period of time. So the developer owns it. They are condominiums. They are registered. They can be sold anytime, but they will be subject to this agreement. It's going to have a finite period of time. Is it going to be 15 years? Is it going to be 25 years? Who knows? But units that nobody wants at prices we don't know yet are now being gobbled up by a government bailout. So this is a prime example of what I say our resale market is primarily vacant houses. Houses that are the sales that are being made are vacant houses that have been on the market for 90 days. They're estate sales, absolutely serious, or last time sellers who own the property before 2003. And choosy buyers are snapping up the best values, the good areas that have had lowered prices or came out at a good price with almost nothing to do. It's a good time to know what the difference between what the Toronto Real Estate Board calls property days on the market versus the days on the market. Property days on the market is where you add, if it's been listed 4 times, you add up all those 4 listings together and how many days it's been on the market. Because a long days on the market is a sign of seller fatigue. You're going to go to the property, you're going to look at it, you're going to say, this guy, this family is dying to sell. Just a matter of needing somebody to put in an offer that's half reasonable and then negotiating a little bit. So what I think our message is, if sales are 40 to 50% below normal, what can I, if I'm a seller, do to enhance what I'm selling? What can I do beyond dropping the price? And the first thing that we're going to jump to, except just in a very quick way, is if you have a principal residence, you live there, it's your home, that proceeds of that sale are not taxable. If you take a mortgage back and you take it for 5 years or for 2 years or whatever, then over the period of time, that is also not taxable. You're receiving that money as a vendor take back, first, second, wraparound, 0%, any kind of a fancy thing you decide to do to boost up your selling price, to make your house sell next, is entirely tax-free. You're receiving the proceeds from the sale of your principal residence over time. It is not taxed. So
the interest that you charge is going to be taxable, but the fact that you can
that's why I'm recommending that you do 0%. It makes the greatest amount of difference to the monthly payments for the buyer. If you use mortgage averaging, where you have a 5%, 4% existing first that he arranges and a 0% second, that brings the average rate down tremendously.
Yeah, that's huge.
What you're trying to do is use the leverage of that 0%, so where it's not costing you anything. What are you going to do if you have $1 million house? And so you take 250, you go back at 0%. Like, what are you going to do with that 250 anyway? You got 250 to sell to give to your one son and 250 to give to your other daughter. And you got 250 to live on for a couple of years. And then you're going to get another 250 in a couple of years from the proceeds of the sale of your house. So look at the big picture. and decide what selling your house quicker and at a better price rather than giving it away to a bargain hunter is going to do for you. So here's inventory, which is exactly what you were saying. A couple of days ago when I did this, there was 4,962 and a half sales. If we take
That's
the sales from the, I guess they did it on the 17th and multiply it out to be what it's going to be on the 1st of April. And right now the actives were just about 21 and a half thousand, which is right here. It's not the highest it's ever been. It's not the lowest it's ever been. And it represents 4 months of inventory. Now, that's because the sales are much better than they were. And we haven't gone full blast, everybody putting their property up for sale. But they will. As soon as things start to move, they will. So there's a sweet spot in here of properties that are tired of being for sale. I'm tired of having showings, tired of dressing up the house 4 times a week, tired of the whole process. And I've lived here for a long time. Let me just sell it to someone with a nice family who's going to move in here. And this is the opportunities that are being bought. This is what these 4,962 sales are. It's not good compared to the average for March. It's nothing, nowhere near the 15,000 that were done in 2021, the best month ever. But if you want to buy something, this is the time to pick and choose. Don't miss out again. Okay. So here we go with the sales. And this is the January to December look using the same number, which was the 31st best March of the last 31 years. So it's the worst. It's not even a point better than worse than last year. It's 44.5% off the 5-year average. It's 44.8% off the 10-year average. It's 42% off the 18 average. It's 41% off the 25-year average. And it's 68% of the maximum. So we knew that. It's 41 to 44% off the averages that we're comparing. Here it is. Now, if we look at it another way, from September to August, which I call the school year, there's many more sales involved in this year that we've tracked. And we see the average running along. This is what March is supposed to be, 8,900, 9,000. And we're off by 45%. So it's not good, but we're following the regular trend. So if we make a prediction on based on what's going to happen next, we're going to have another couple of gains, and then it's going to fall off in the summer, just like it always does, and then start over again. So
right.
I'm going to say that if you want to buy something, the time is right. If you want to sell something, you will probably get the most amount of activity when the snow finally goes away. Thank you, goodness. And when the green shoots, the green sprouts start to show. Now, my estimation of what's going to happen to prices is based on what's happened in the last 25 years in between February and March. The average over 25 years was going up by not very much, staying the same. So that if it stays the same, and I cut it in half, take a 50% increase of that. So I got 0.33%. It's the sixth highest March ever. 1, 2, 3, 4, 5, 6. Falling right in this big hole from that zoomed it up when the boom was on. So what do we expect to happen if we follow the whole chart? Maybe you go up a little bit and it's going to fall down a little bit and carry on, but pretty flat, pretty flat. We're 24% off the all-time peak in prices. We're 10% off the peak of the last year. We're up a bit from a month ago, and we're down 7% from a year ago, and we're down 22% from the highest price ever, which was in March of 22. February
Yeah,
22
that
was a
was
month
an
later.
enormous.
Yeah.
That was an enormous month. Enormous
Yeah,
prices.
so that nobody can remember what that was like, how fabulous it was. This whole period here was just
Uh,
everything flying off the shelf. So this is where the
yeah,
calculations came from. Now this is my regular thing of the StatsCan came out with another annual increase that they said was 2 point something or other percent. But part of that again is gasoline falling off 14.2%. It's a false average. The average really should be higher, but it's a blend of all these things. So If you're a buyer, will you miss the best deals? There's only one time that you can buy my grandma's house. Only one time. Are you going to miss that? Get out there and look. If you're planning to live in a property for 5 or 7 years, are you going to live there and actually be part of the neighborhood, the community? Is it going to be an improvement over where you live now? Like maybe financial improvement. You're in $2 million, you're going to buy to 1 million, but you're going to improve your life by having not a throttling mortgage on it. We presume that you'll only buy a great neighborhood, a great home with not much to do at a great price. So do you think prices will stay at 82.5% of the peak? Like you see all kinds of guys from the stock market saying it's going to drop 50%, which is about where we are now. Do you think it's going to fall to 72.5% in the next year or so, which is around 950? Maybe it's 925, I don't know. Or is it going to collapse to 650, 800? Is that what you're waiting for? Is that what you're waiting for? If you're waiting for that, then you can continue to wait, and you can wait until you see it turn. You may
Yeah,
see
I
it
think
turn
it's
in 2 weeks, in 2 months, or in 2 years, but don't miss out on the opportunity. Sellers are beat up right now. They're saying, what do I have to do to sell my house?
and
And
they
that's
make
the kind of negotiation partner that you want to enter into. Sorry for cutting off here.
yeah, no, that's okay. I was going to say they've I think in general, people in the market have accepted the fact that prices are down and may continue to drop, although I don't think as far as that, but we can't be sure. And also, as you mentioned, the long term is the thing. If you're going to be there for 3 to 5 to 7 years or more, if you buy now, your value, your equity will increase as you pay your mortgage off, same as it always has, and you'll get use and enjoyment out of it. And you can buy now without the stress of competing, and you have the I guess call it a luxury that we didn't have in the previous markets. Some of them, like in 2022, of taking your time to make a considered decision, well considered and well educated decision, and be comfortable with it. And
Good
you'll get
point.
it cheaper than you would have just a few months ago. And you don't have
Absolutely.
to pay the asking price necessarily, but you don't have to bid and compete. There's so many good reasons to look now and actually
That's right.
commit to
Like,
moving.
and you also have to be informed that the seller on the opposite side knows what he's up against, too, she's up against, and are doing everything they possibly can to create a bidding war on the property that you will go and see. So you can go and see a new one. Someone's been for sale for 4 days and they're wanting offers next Thursday. Was a low asking price, and you know you're going to have to bid up over that. There is no charge for making an offer.
No, that's right.
And you just go in there with your eyes open, say, I'll pay this for that. Here you go. And be prepared to walk away.
Yeah. Oh, and the difference is when there have been multiple offers, um, interestingly, properties have sold for under the asking price with multiple offers or
Good
at
point.
or close.
Yes,
So um, that's another reason. You're competing, but you're competing for, for a great price, especially compared
exactly.
to what it used to be.
Yeah.
Uh,
So,
and I just wanted to say the point you made about taking back a mortgage.
yeah.
That's something I haven't done one of those since the 80s, I think.
Well,
That's
no, because
taking
everything
back a
was low
mortgage.
rates, and it was a buyer beware market. It was a seller's market, so he wanted cash. He wanted a full cash settlement. He didn't fiddle around with anything like that.
And
But
yeah,
the
that's a
same
very
things.
little. Oh,
Yeah,
sorry.
you're right. So
I
there's
thought
a
you were
lot
done.
of people that don't know what you're talking about. I phoned up TD Bank and asked the fellow in our office that works for TD and saying, "Do you still do mortgage buy downs where you prepay the interest and there's a formula for doing it?" He said, "No, we don't do that anymore because they're just out of the habit. But they're going to do one for the first time one of these days, just like you're going to do a vendor take back, a seller take back,
Right?
to keep, not to sell mortgage one of these days. And it may be the final agreement that gets that buyer who wouldn't budge off of X dollars that he wanted to pay to go up to X plus 50 that your seller will accept. And now it's a deal. And they're both happy. One's got a financing package and the other one's getting the proceeds from the sale of his principal residence over time rather than cash as a lump.
Right. That's a very little used tool lately. And I think that's
Agreed.
going to make a comeback. I think, yeah, I did a couple of those last few times were mid 80s, maybe. That's as far as I can remember. And that's just disappeared off the scope, off the radar
Yep. Yep.
as
Cash,
a
cash,
tool to
cash,
get it
cash.
sold. Yeah.
Everybody pays cash.
So,
So I don't want to belabor that fear of missing out theme, but all the way along, we've been saying we'll decide which camp we're on, and is it going to bust out or is it going to continue to drift lower? And I'm going to take on the camp that it's a great time to buy, not because of any other reason than you're dealing with someone who's absolutely serious about selling.
yes. Yeah. People still have to move no matter what's going on in the world. Have to move, downsize estates, growing families. They still have to move, and they'll adapt to how they need to in order to do that.
Which is what you said at the very outset. People who are selling have now grown accustomed, resigned themselves, are prepared that they're not getting 2022 price for their house anymore, but they're certainly getting the sixth best price that was ever possible to get for that house uh, ever in history.
Yeah, yeah,
So
absolutely.
I think I'm going to wind it up just because we're doing a preview. We don't have to talk about everything that we know in the whole world, even though we're tempted to. And if you'd like to throw something in at the end, Ronnie, then I think we'll say bye bye.
All right, nothing else to add except start looking. The
Start
deals
looking and
are out
making
there.
offers. No charge
Yeah,
for making an offer.
absolutely.
Okay, so thanks again, Ronnie, and we'll
Cheers,
see
and
you
thank
next
you.
time.